Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is, now this is a long trivia theme questions here. Choose the player, we're talking baseball here, choose the player who played on the given World Series championship team and later had their number retired by that club. So it's a little bit complicated, but we'll see how many people know the answer to these questions. Today, we do have a special guest, Kim Flynn of XA Investments. I'm going to have to ask her after I read her introduction how she came up with XA Investments. Let's see here. So the title of this show is exploring alternative investments in the growing interval fund market. So Kimberly, or Kim, is a CFA, is founder and president of XA Investments, where she's responsible for all product and business development activities. XA Investments has a proprietary, thank you, closed-end platform and a consulting practice to assist clients with developing U.S. and U.K. registered closed-end funds. Previously, Kim was senior vice president and head of product development for Nuveen Investments, global structured products group. Kim received her MBA degree from Harvard University. We won't hold that against her. And her BBA in finance and business economics, summa cum laude from University of Notre Dame in 1999. Kim earned the Chartered Financial Analyst designation and is a member of the CFA Institute and CFA Society of Chicago. Kim, welcome to The Best of Investing.
Great, thank you. And I don't know the answer to your trivia question, but we've got a lot of great baseball in Chicago with the Cubs, and maybe not so much with the White Sox this summer, but nonetheless, we're a big
Well,
baseball
that's true. And I
city.
haven't asked the trivia questions yet, but when I do, actually, one of them does have to do with the White Sox. I didn't know that you,
Oh,
I
there you
didn't, when I
go.
put this together, I wasn't looking at your Chicago part there, but that's kind of fun. So, first of all, XA Investments, how did you come up with XA Investments?
Well, it's funny. It simply is an acronym, an abbreviation, because my firm is part of an investment bank here in Chicago. But the X stands for XMS, which is the parent company, and the A
Yeah.
stands for alternatives.
Okay.
And funnily enough, though, I mean, uh, if you're familiar with Elon Musk and the many companies that he has started, one of his businesses is called XAI, little x, big A, big I, and we've been using that acronym for a few years longer, and obviously our focus is entirely on asset management and alternatives, but nothing to do with AI. But it's just
Okay.
a small world, and I know
Yeah.
that Elon likes his X's. So
Yeah. Yeah. I know. Everyone still calls it Twitter, though. I got it.
that's right.
Um, Okay, so and I'm familiar with Nuveen. They're a mutual fund
That's right.
company. Yep.
That's right.
And now you apparently, so you have God, why can't I say that word? Proprietary. There we go. Closed end platform and consulting practice. So explain to the audience the difference between a closed end fund and an open end fund, please.
Sure. So I think probably what your listeners are most familiar with would be a mutual fund, which is technically speaking called an SEC registered open end fund, and it's open
Yeah.
in so much as people can add money and take their money out. So it's continuously offered. That's what a mutual fund is. A closed end fund is a little bit different. It also is an SEC registered product. It's also used by investors saving for retirement, but it can be periodically closed. And so because of the closed nature, it is better for certain types of assets. So think about private equity or real estate or infrastructure. Those are less liquid, long duration assets. And
Yeah.
so if liquidity is an issue, a closed-ended vehicle, and there's a few different types that are available for individual investors, but that's what the closed is speaking to, is that you can't just redeem your money from the fund um, when you want it, and so that strikes the difference between the open and the closed end fund.
Yeah, and there's pros to cons to both because closed-end funds generally get, if they're traded on the stock market, they're going to be subject to the whims of the ups and downs of the market. But the benefit is the fact that you know exactly what's in it versus an open-end fund. They keep purchasing new assets. So I get it. Okay, we're going to ask our first trivia question here. We're going to talk up the 1964 Cardinals. All right. So which player? Let's see. Our trivia question is choose the player, and I'm going to give you a multiple choice on the given World Series championship team that later had their number retired by the club. So in the 1964 Cardinals, we have you have a choice of Stan Musial, Ken Boyer, or Orlando Cepeda. Call 888-912-1190. First caller with the correct answer wins that tanning certificate, which is worth $100 or more. Stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Kim Flynn, my special guest. The 1964 Cardinals, Stan Musial, Ken Boyer, or Orlando Cepeda. Which one got their number retired after winning the 1964 World Series? Which one?
My husband's a Cardinals fan. I don't know. I'm gonna go with number one, Stan.
Stan? No, actually, it was Ken Boyer. He must have had a very good series in 1964. I do want to make a mention here for Transcendence Theater. Check out their upcoming performances. It's like Broadway. Bestnighthever.org. Also want to make another mention here for Dr. Wilkinson's Backyard Resort and Mineral Springs, voted best natural hot springs in Calistoga. I've been there before. It's fantastic. And they were voted best natural hot springs in Calistoga by Travel and Leisure magazine. Call 707-942-4102 or go to drwilkinson.com. All right, so we are in the Zoom studio, so to speak, here with Kim Flynn, who is the founder and president of XA Investments. So let's see. How can individual investors access private equity or venture capital investment opportunities?
Well, it's interesting because it used to be that you couldn't access unless you were wealthy enough to afford a private fund.
Yeah.
And frankly, many people don't want to deal with the tax forms that come along with those private fund investments, the K1s, And
Yeah.
so what's really changed is we're able now to make available these types of alternatives that have been long the domain of institutional investors. And the reason is they're now being packaged in SEC registered products. It's called an interval fund. You can ask your financial advisor, but it opens up a door to a lot of different types, a variety fit within this structure. They're not just all private equity. You can get private credit, you can get real estate, you can get real asset type products. But what you're going to get in these structures is very different than what's available in a mutual fund or an ETF.
Oh, okay. And why is access to private markets important for retirees and for those saving for retirement?
Well, I mean, as you know, the burden for saving for retirement is on your shoulders and my shoulders. And it used to be that institutional money managers at pension funds would invest with a fairly long investment horizon, and they would deploy capital into private equity, venture capital, real estate, and those types of investments. Some of them may come with higher risk, but they also come with higher levels of total return. So if as an individual investor, you're limited to just stocks and bonds through a mutual fund, you're not participating in the full spectrum of investment opportunities. And what's really important today is that we all hear on the news that companies are staying private longer or they're delaying their IPOs till
Yeah.
later. So that growth that's happening in American businesses, if you just invest in the stock market, you're going to miss out on that growth.
Gotcha. Yeah, it's interesting. My main focus is that I invest in notes. I'm a lender,
Sure.
and I was just looking at my portfolio, and one of the notes that I had purchased at a discount is one that matures in the year 2063.
Wow.
I'm going to be 103 years old then, and I'm going to make sure that I outlive that loan.
Talk about
It'll
a
get paid down to zero then, but it's a
yeah.
good, and if it gets paid off earlier, then I'll just make extra little gain on it, so to speak. Um, so We were mentioning earlier an interval fund. What is an interval fund?
Yeah, an interval is a type of closed-end fund, and interval just refers to the liquidity window. So
Mm,
many of these funds are available for purchase. You can go in on any day. Many of them, if they're daily NAV, you can buy them on any given day, but you can't
okay.
exit on any given day. Many.
Huh.
Most of these funds are the liquidity is available on a quarterly basis, and only a certain set amount of liquidity for all shareholders is permitted on a given quarter. And so that's what allows these portfolio managers who are deploying capital into private equity, they're not going to be subject to withdrawals or redemptions. It's a known amount. 5% a quarter is going to come out. And so they're going to be able to plan for it, and they're going to be able to tap into sources of liquidity that are natural within the portfolio. But it's important in terms of, you don't want to be a forced seller of your home, for example, or your
Yeah.
commercial building. It takes time to sell those types of long duration assets. And so that's why the interval fund there is to allow access, but it also does protect you from forced selling.
So I guess one of the potential problems is if you get a run on the bank, then
Mhm.
those people know that they're just not going to get redeemed for quite a while. And I guess open-ended funds don't really have that. I mean, but they're forced to sell if there is a run on the bank, they'll have to sell their stocks at whatever is the NAV at the time. All right, tell you what, here we're going to cut to our second break. I know it goes very fast here, and again, the theme is to choose the player who played on the given World Series championship team and later had their number retired by the club. All right, we're talking here about the 1985 Kansas City Royals. You have a choice of Hal McRae, Willie Wilson, or Frank White. Call 888-912-1190. First caller with the correct answer wins that tanning certificate, which is, again, worth about $100. Want to make a mention here also for Mountain Mike's Pizza in San Rafael. Pizza the way it ought to be. And I tell you, every week when I do this commercial, I always get hungry for pizza right at that time. So check them out at Mountain Mike's Pizza in San Rafael. Stay with us. You're listening to The Best of Investing. Don't touch that dial. We are going to be right back. Welcome back to The Best of Investing. One more time, I'm Edward Brown, your host, along with my special guest, Kim Flynn. The second trivia question, the 1985 World Series winners, Kansas City Royals, which, by the way, a friend of mine played shortstop for them. Hal McRae, Willie Wilson, or Frank White, which one of those three got their number retired after the World Series?
Mm. I got to get one. I'm going to go with number two, Willie Wilson.
Number two, Willie Wilson. That is correct.
Nice.
Very good. Always go with the middle one. Yeah. Do want to make a mention also here for the Axiom Hotel in San Francisco, which is located in the heart of Union Square. The Axiom Hotel blends a sense of history with modern touches. Guests rave about the staff and how quiet the hotel is, especially when you're right around Union Square. Check them out, axiomhotels.com. So in our studio, our Zoom studio here, we have Kim Flynn of XA Investments. Kim, what types of alternative investments are available in the interval fund package?
Well, so there's now over 225 funds. There's been a rapid pace of new alternative fund sponsors bringing funds to market, which is really great because there's a lot of quality managers, and it's across a wide spectrum of alternatives. You have hedge fund strategies, you have really interesting venture capital funds that are being formed, and everything in between. Inflation has been really top of mind, and
Yeah.
we've seen 12 infrastructure funds come to market because investors want some income, but they also want to know that their investments are protected in an inflationary environment. So a lot of different choices, things that really are not available in mutual fund or ETF packages.
And these interval funds, I mean, they would not get traded on the stock market, because otherwise you wouldn't have to worry about the redemption period. You would just sell the stock,
Well, see, it
right?
sounds like you know
Hmm.
something about listed closed-end funds. So,
Yeah.
the truth is, most of them are launched to remain non-listed, non-traded, and
Okay.
so in that sense, it's like a mutual fund where the liquidity that is provided by the fund sponsor. So they do have to redeem out about 5% a quarter. Now, there are a handful of these funds, though, that have gone ahead and listed on the stock exchange. Now, you have to
Okay.
abide by the New York Stock Exchange rules regarding the different types of assets. So some of the funds, like for example, a fund of private funds, where the private funds underneath charge performance fees, that's not going to work on a listed format. But let's say you had a private credit strategy, maybe structured credit or direct lending. Absolutely, you could go to shareholders and get a vote to go ahead and list that fund. And then the benefit for shareholders is then you get liquidity on the exchange. The funds
Yeah.
could trade at a discount. They may trade at a premium. It just depends on supply and demand. So there are
Yeah.
a handful of funds, Edward, that have done that.
Okay. Um, let's see here. And what do you see are the main benefits and key risks of investing in alternatives?
Yeah. Well, let's start with the risk. I mean, you've really hit on one of the key considerations before you would consider investing in alternative investments. You have to have the right time horizon, which is much longer. You have to have a
Mm.
plan for your overall portfolio in terms of sources of liquidity, because you're not going to want to be selling your house, nor do you want to be selling your interval fund
Yeah.
positions if you have a market downturn. You need other sources of plan for liquidity, and, I would say most US investors right now are over allocated to US equities, which tend to
Uh-huh.
be fairly liquid. So most investors could stand to take a portion of their investments. Maybe it's 5%, maybe it's 10 or 12%. Risk appetite will dictate how big that allocation, but you should bear in mind that that's the investment allocation that you're going to sell last, if you can hopefully avoid selling out, because the concern is that you'll be stuck in a fund if you're trying to
Yeah.
sell your shares, and that is the biggest risk, which is the risk of proration. And if you want to get out of a fund, it can be a bit frustrating if you're trying to sell out of that. I feel like some real estate investors have had that experience, if you've ever invested in some of those real estate private
Yeah.
trusts. And so it is a question on people's minds. Now, the benefits, are that if you don't have access to private companies or to private credit, um, these parts of the market, the direct lending market, has really filled a gap in our capital markets, that banks are no longer lending the way they do. And so frankly, the yields that you can earn on a direct lending portfolio are quite terrific. Many of them are in the low 10 to 12% range, which is much
Yeah.
higher than you could earn on a high yield portfolio, for example. So for retirees, a lot of good private credit options.
Great. All right. We are going to cut to another break. I'll ask the trivia question on the next go around. Stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. I'm Edward Brown along with Kim Flynn here. And we didn't have a trivia question. We're going to ask one more next time. We kind of ran out of time on this one. So, Kim, what are the, or why is the interval fund market growing so quickly?
Well, you've got two sources of growth. One is you have traditional asset managers who historically have managed mutual funds, and much of their business has been cannibalized by lower fee ETFs, just as the market has shifted
Mm.
largely into both active and passive ETFs. So there's that motivation. The other side, in terms of people launching funds, are firms, general partnerships, and private equity firms, what managers of institutional capital who've never before managed retail money. And so they're now launching registered funds and building out sales teams to be able to go into the wealth management market. And so you have entrants from both sides. And the nice thing for investors is there's a lot of quality, experienced teams And in alternative investing, manager skill is of the utmost
Yeah,
importance because the return
absolutely.
dispersion is so wide, between the best and the worst when you're talking about private equity or venture capital. So the good news is there's a lot of new entrants that have a terrific amount of experience, largely with their institutional client base, that are now available to investors in the wealth management channel.
Okay. And now, what does XA Investments like? Give out your information. How do people utilize your services?
Sure. So we're here in Chicago, and we love to talk with folks about new product ideas that you might have. We're available at xainvestments.com. We have a knowledge bank where there's a lot of resources on the interval fund market and what it might mean for you as an investor or as an asset manager.
Okay. What do you charge for your services?
We have sort of two sides of the business. One is we have our own closed-end funds. We have a listed closed-end fund, and we have an interval fund. And so, those are people pay management fees as you normally would for registered fund. The consulting business is a bit different, and we charge asset managers sort of a range of fees depending on how much help they need to get to
Mhm.
market. And a lot of the alternative boutiques that I mentioned, they don't have the middle and back office support. They've never managed a
Yeah.
40 act product. They don't even know what it means to sell into the wealth management channel. So there's a lot of hands-on services that we provide asset managers on the consulting side, um, and it's been a great business.
Do you deal with broker dealers at all?
But we do on both sides of our business. One is helping our clients get onboarded at those broker dealers, and there's a variety of ways that people approach the market in terms of where their distribution strength might be. You got a firm like PIMCO, and they sell into every single channel. Some of the
Yeah.
boutique managers are a little bit more narrow. Maybe they're family office only, or maybe they're independent financial advisors only.
But some of the alternative investments where they're not traded, it can get pretty expensive to deal with the broker dealers because either you have to pay them a commission or you have
Yep.
to go through thousands of dollars worth of due diligence.
Yeah.
What
That's
what
true.
advice do you generally have for those people for those companies?
Well, I think so. A few years ago, there were more funds that launched initially in the broker dealer channel, and partly
Yeah.
because the good news there is that a lot of those advisors are very experienced with alternatives. They've long been investing in real estate or private credit. And so, in that sense, you don't have to convince them of the thesis around alternatives, but
Yeah.
many of them are commission based advisors. And so the upfront
Yeah.
commission can be expensive, it could be 5 or 6% upfront. But the
Yeah.
nice thing here is it's the fund sponsor that's paying those commissions now in today's market. It used to be that some of the shareholders would pay those upfront commissions. Now the market has shifted post DOL and a lot of protections that have been put in place for shareholders, that so fund sponsors are now fronting the cost. So yes, it can be expensive. Now a family office, for example, they're going to want a very clean share without a
Yeah.
commission, right? So it does vary depending on the channel you're going into.
And how do people get a hold of you if they
Um,
want to hire your services?
Absolutely. You can shoot me an email or go to our website and get our contact information, xainvestments.com. My email is kflynn at xainvestments.com. And we're always very responsive. We probably talk with 10 or 15 people for every firm that hires us, but that's
Yeah.
perfectly all right because we love to be talking with everybody in the industry, and as it's a very sort of evolving space, and some of the new developments are very exciting.
All right. Let's see here. We're going to go to our next commercial break, and we're going to ask the trivia question now. Okay, so again, the theme is choose the player who played on the given World Series championship team, talking obviously baseball here, and later had their number retired by that club. And now we're getting into Chicago, the 2005 Chicago White Sox. All
Mm.
right. So here's the since not everybody comes from Chicago, we'll give a little bit of a hint by giving a multiple choice. So, which one of these players, after winning the 2005 World Series with the White Sox, had their number retired by the team? Orlando Hernandez, Mark Buehrle, or AJ Pierzynski?
Mm.
All right, call 888-912-1190. First caller with the correct answer wins that tanning certificate. Again, which one of these players who played for the 2005 White Sox, they won the World Series, and then later on they had their number retired by the club? Orlando Hernandez, Mark Buehrle, or AJ Pierzynski? All right, that's our trivia question. Don't say anything yet, Kim. When we get back, we'll see if you know the answer to that. Also, when we come back, I do want to make a mention here for Pacific Private Money and what they're doing with their alternative funds, because they are a lender, and they're paying anywhere from 7 to 8 to 9, even up to 10%, depending upon how much money gets invested, and it's fairly conservative because you're the bank, you're the lender. So they're not investing in owning real estate. They are lending the money out. All right, stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back with some closing comments. And don't forget our thoughts for the day. Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with my special guest, Kim Flynn of XA Investments. All right, third trivia question, and again, here is the theme, is which one of these players played on the given World Series championship team and then later had their number retired by the club? So that we're talking now the 2005 White Sox. You have a choice of Orlando Hernandez, Mark Buehrle, or AJ Pierzynski. Come on, Kim, you're a White Sox fan.
I know. I'm stuck between Mark and AJ. I'm going to go with Mark Buehrle.
Yes.
Nice.
Yes, Mark Buehrle.
Nice.
Very good. In fact, it's funny because here in California, we have AJ Pierzynski. We have a little bit of a angst for him because of what happened. But anyway, forget that. Mark Buehrle, yes, he had his number retired by the 2005 White Sox. So, well, again, I wanted to get into a little bit what a Pacific Private Money is doing. So they have a few different funds. One of them is called the Opportunity Fund. That one is a mostly construction lending fund. And since there are a lot of lenders who have backed away from construction lending, they're getting a lot of good look-sees at loans that are pretty. They get some good oomph to them. Let's put it that way. If you go to pacificprivatemoney.com and check that out, you can find out more about the Pacific Opportunity Fund. Then they also have the Freedom Fund, which does short-term loans, primarily bridge loans. They'll sometimes hold them for in their portfolio, but a lot of times they'll sell them out. So it's a fairly in and out type of fund, and they're paying anywhere from 7 to 10%, depending upon how much you invest. In all their funds, you do have to be an accredited investor, which the definition of that is $1 million net worth exclusive of your home, or $200,000 a year income if you're single, $300,000 if you're married. The other fund is a fund that I actually am one of the managers. It's the discounted note fund called the Southwest Note Fund. That one we just pay a flat 8.5%. It's very conservative. We're at 59% loan to value, but because we're buying the notes at discounts, I believe it's 37% loan to value, and the fund's unlevered, so that's a true fund, true yield. We're not enhancing the yield at all, so you can check that out. Again, I'm a little biased because I'm one of the managers, but all their funds are good. So check them out at pacificprivatemoney.com. and see if it's any kind of fund that you're interested in. Also, if you're a borrower, because they get mostly they get loan requests from banks and mortgage brokers and realtors. It's kind of rare that somebody walks up to their front door and asks for a loan, because usually you go through one of those channels. You go to your regular bank for the best rate, and when they can't do it fast enough, or there may be something small glitch with your credit report, then you can check out Pacific Private Money, and they say no a lot. I mean, not everybody who walks in gets a deal,
Yeah.
gets a loan. So they're pretty conservative with their underwriting, and that's why they performed very well over, let's see, they've been in business since 2008. So they were making loans when things were going
Hmm.
down in 2008, 9, 10, and 11, and 12, and yet all their clients still made money. So check them out, pacificprivatemoney.com. All right, we're going to cut out for our thoughts for the day. Again, Kim, thank you very much for joining us here on The Best of Investing. So I think they picked me for my motivational skills. Everyone always says that they have to work twice as hard when I'm around. Yep. And let's see, what else we got here? And accept that some days you're the pigeon and some days you're the statue. All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.